Quiet now, everybody. Quiet, listen to me. We're going to start a show. Now, some of you people have been with me before. You know it's going to be a tough grind. You're going to dance until your feet fall off. You're not able to stand up any longer. But we're going to have a show.
Welcome to the Pink Door Podcast. Today we are launching a deep dive into a market that, I have to say, constantly surprises us. Hull, Massachusetts.
It really does.
We're going to be tearing apart the real estate activity for November 2025. We'll be looking at, single-family homes, condos, the whole deal. We've got all the data supply, how fast things are moving, and of course the big one, pricing.
Yeah, and our goal for you today is really efficiency. We want to be your guides here. Just cut through all the noise and the metrics and pull out the 2 or 3 most crucial trends.
And they often seem to contradict each other, right?
That's Hull. It's never simple. And we really need to understand the momentum. I mean, is that rapid pace we've seen finally starting to give way? And if it is, what does that mean for pricing?
Okay, let's just jump right in then. Starting with the big picture. When we take a step back, Hull is it's a super desirable coastal market. The overall indicators, they all confirm it's still very much a seller's market.
It is. That's the baseline truth. But the devil is really in the details, especially when you start looking at supply.
Right.
We use a metric called months of inventory, or MOI. It basically tells us how long it would take to sell every single home on the market right now if nothing new came on. And for November, it stands at 2.3 months.
2.3. So for context, a balanced market is usually what, 4 to 6 months?
Exactly. 4 to 6 months is where neither the buyer nor seller really has the upper hand. So 2.3 is still, heavily favoring sellers. Yeah. But
there's always a but.
There's always a but. What's so fascinating here is the sudden shift. That MOI number saw a really significant month-over-month jump of 28.57%.
Whoa, wait. 28% in 1 month. That's not a trickle.
It's not. It suggests a couple of things. Either buyers pumped the brakes a lot faster than sellers did in November, or, maybe a few more listings came online than you'd typically see in the late fall. Either way, that 28% jump matters. It's a little drip of new choice for buyers, and if that trend continues, it could be a small sign of hope for people who've just been desperate for options.
So that's the supply story. But I think the real aha moment in this whole deep dive, the number that really stopped me, was the speed, the time it takes to actually close a sale. The median days in RPR, it jumped to 23 days.
And we have to pause on that one, because this isn't just days on market.
Right, it's not how long it takes to get an offer.
Exactly. RPR, the Realtor's Property Resource, it's a better gauge of the actual time to get through everything. The appraisal, the inspection, the whole lending process. And this shift, it's seismic.
How seismic are we talking?
We are talking about a 360% month-over-month increase.
360.
Just think about that. Homes that closed in November took over 3.5 times longer to get through all the hurdles than the ones that closed in October.
Okay, a 360% jump in closing time. That feels like there's a serious problem somewhere in the pipeline. Can we still call it a white-hot seller's market if homes are taking a month longer to close? That sounds like lending issues.
That is the tension right now. It's still a seller's market because inventory is so low, but the pace is now being dictated by these external forces. It's probably rising interest rates, tightening up lending, or it's just buyers taking the time they need for due diligence.
So that frenzy, the part where you waive everything and close in a week,
yeah,
that seems to be fading.
It seems to be, yeah. Buyers are pausing.
So when buyers pause, they usually try to negotiate. Did this slowdown actually give them any real leverage?
A little bit, but it's subtle. We look at the sold to list price percentage. In November, it was 98.4%.
Which is still incredibly competitive. People are paying very close to the asking price.
They are. But compared to last month, that ratio dropped by 3.13%. And when you put that drop next to the 360% jump in closing time, you see the story.
It's clearer now.
Buyers are taking more time, lenders are scrutinizing them, and they are successfully chipping away a little bit at the asking price. On a $700,000 house, that's like an $11,000 discount. On average, it's not huge, but it's leverage that just wasn't there a month ago.
So the buyer's finally tapping the brakes, but
Yeah.
the car's still moving pretty fast. Okay, let's shift from speed to the number everyone really cares about, the money. What was the median sold price for November?
The median sold price landed at $727,500.
$727,500. And despite this huge slowdown in closings, How did the price actually move from October?
Well, this is the thing. It held its own. It even pushed up slightly by 1.69%.
Wow.
And this is so crucial. Even though it's taking so much longer to get deals done, prices are not going down. They are. They're showing this incredible resilience.
Okay, so here's where the numbers get really interesting for me. We have the actual median sold price at $727,500.
Yeah.
But then the median estimated property value is way lower at $683,260.
Right. And that gap is a really important question about the whole market. The estimated value, that's just an algorithm's best guess based on area comps.
A computer model.
Exactly. The fact that the actual sold price is running almost $45,000 higher suggests those models are just consistently undervaluing a whole property.
So why are buyers consistently paying that premium over the models? Is it just market confidence?
I think it's more than that. I think it's hyper-local commitment.
Yeah.
A valuation model can't measure the view. It can't measure the scarcity of waterfront access or, the desire for someone to live on the South Shore. Demand is just overriding the pure math.
Which really speaks to the long-term belief in the area. And that brings us right to the appreciation numbers because they're kind of the engine behind this whole thing.
They really are. I mean, if you look at the big picture, buying in Hull has been a spectacular investment. The general estimated value is up a solid 5.2% over the last 12 months. But the sold price metric, that's where you really see the wealth creation.
Give us the hard numbers on that.
Over the last 12 months, the median sold price jumped an incredible 15.02%.
15% in 1 year.
Yeah. A year ago, that median was $632,500. And if you go back 2 years, we are looking at a jaw-dropping 36.01% increase from November 2023.
36% in 2 years. That's not just growth, that's aggressive acceleration. And that explains why sellers feel like they're in control, even if deals are taking longer.
Absolutely. The market has completely re-rated itself. That $727,500 median isn't some random spike. It's the new reality of value in Hull.
Let's talk about volume now, because the activity in November was just incredibly thin. We only had 4 active listings at the end of the month.
Just four. I mean, if you're a buyer, you're shopping in an empty grocery store. You have no choice. It just confirms that scarcity problem we've been talking about.
And what did those 4 listings look like? Were they
Yeah.
priced high?
Oh, yeah. They were high end. The median list price for just those 4 homes was $795,000. And the total asking price for all 4 was over $6.5 million.
Yeah.
It's clear what little inventory is left is at the very top of the market.
But here's the kicker. Despite only 4 active listings, there were 10 total properties sold during the month.
Right.
So we need to figure out how those 10 sales created that $727,500 median and an even higher average price.
And this is where the luxury demand story really comes through. The market wasn't driven by sales around the median. Only 3 of the sales were in that 700,000 range. Just 2 were below 600,000.
So half of all the sales happened way up the price ladder.
Precisely. We saw one in the high 8s, another in the high 9s. But then you hit the luxury tiers. One sale between $1 and $1.5 million, one between $1.5 and $2 million. And, remarkably, one sale between $2 and $2.5 million.
Those big sales at the top, they're not just noise. They're basically redefining the price ceiling for the entire town.
They are. The overall average price of those 10 sales was $985,000. So while the median is more stable at $727,000, that super high average shows us there's a strong, persistent group of luxury buyers setting the tone for value in Hull.
So what does all this mean for you if you're watching the Hull market? We've got this clash of 2 powerful forces. On one side, you have this incredible, sustained, long-term appreciation. A median price that's up 36% in 2 years. The market is just worth more, period.
But on the other side, you have the day-to-day reality changing dramatically. That 360% increase in the time it takes to close, that's the single most important metric for November. It's signaling buyer fatigue, stricter lending, a real pause in the velocity of the market.
It's a fascinating conflict, isn't it? Value confidence versus operational difficulty.
It is. And I guess the provocative thought you want to leave you with is this. Does that dramatic increase in closing times and that little drop in the sold-to-list ratio, does it suggest the high tide of those super fast, frantic sales is finally receding, even as the underlying prices and the long-term value continue to climb?
A slowdown in pace, but not in price.
Exactly. Buyers are being slower, but they're still committing to the high price tags. And that balance is what's going to determine where the whole market goes next.
If you have any questions about this episode, or if you are thinking about buying or selling a house anywhere on Boston's South Shore, from Southie to Sagamore, give Jim Aldred a call. He would love to help you. Thanks for listening. And see you next time on the Pink Door Podcast.